Bismillahirrahmanirrahim. Assalamu alaikum. So we're starting with financial statements, and we're going to start this from the book because it's the most extensive piece of material we have regarding financial statements. So let's carry it forward. Introduction is that why do we need financial accounting records? Essentially, it's for audits. It's for comparing your results, and if you've reached your objectives. Because most of the time, business objectives are regarding profit, sales, revenue, like revenue maxing, sales maximizing, satisficing, and profit maximizing, and it all depends on shareholder, right? And what they want, and the stakeholders, and what the CEOs want, and what the directors want. And sometimes you need financial records to pass tax returns, to pass ACAR audits, and everything as such. So that is why we need financial accounting records. There's not a lot of information right here, but we'll look at table 33.2. So now, as I said, you can see if you made a profit or loss, if you reached your objectives, if you paid your suppliers, whatever you owe, your liabilities, your assets, your revenue coming in, your cash flows, and the money you're owed, and the fixed costs, and the variable costs, and your total costs. That is all inside an accounting statement. So moving forward, there's two main types of financial statements. One is a statement of profit or loss, and the second is a statement of financial position. So profit or loss will show you gross profit from operations of the company, and it shows how the profit is split up amongst the company. Like you pay some dividends to the people who own shares of your company. Statement of financial position is practically the net worth or the liabilities of the company, like my assets and the liabilities I owe, like the loans I have to pay back, and the assets are maybe the table I'm sitting on, the chair I have, the house, the buildings that I own, and everything that the company owns. Liabilities are what the company owes. There's two types of liabilities, which we will discuss further on in the chapter. So first, we're dealing with statement of profit or loss. So the contents of a statement of profit or loss are as such. We've divided them into three parts: the trading account, profit or loss section, and the appropriation account. So in the trading account, we have the main idea, like the total whole everything, right? So you have revenue, cost of sales, and gross profit. So we're looking at this company right here, exactly in this position. So the revenue they've had is 3,060, let's say. The cost of sales, the total cost that it had to make that revenue was 1,840. So what is the gross profit? We subtract revenue, we subtract the cost of sales from revenue, and we get the gross profit. And then we look at the profit or loss section, the little niceties, the intricacies of everything in it, right? So you had gross profit 122, right? So now you need operating profit. How do you get operating profit? You subtract the overheads from the gross profit. What are overheads, you ask? Overheads are costs that are not related to production. Now, distribution, the direct production, like the machinery, the capital goods, the labor, is cost of sales. But overheads is like the electricity bill, or the bill you paid to the marketer, or the auditor. That is what is overhead. So the puri company, the whole company's costs, you subtract from the gross profit, and you get profit from operations, operating profit. And then you pay interest, which is maybe your liabilities, your debt, and stuff like that. And then you get profit before tax, which is before you have been deducted the corporate tax, which is a government tax, indirect tax, and sometimes direct, which is income tax, not corporation tax. So you get the corporation tax, which is 20%. Then you get the profit for the year, that is 448. Now, when you have the final profit, which you can use, which is 448, everything else is out, because you spend some on tax, some on interest, some on overhead, some on cost of sales. So from the revenue you have left for the profit for the year is 448. Now what do you do with that? That's appropriation. Either you give the dividends to the shareholders, which you've given right here, and then you get retained earnings, which means you can reinvest that profit, right? Like into research, into buying more capital goods and everything as such. Now let's look at the more integral part of the whole statement of profit or loss. So trading account. So this here has gross profit or everything has been made. So as we discussed before, we have the total revenue is selling price times quantity sold. So if 120 items are sold at $2, the revenue is 240 because 120 times 2 is 240. And the cost of sales is obviously not going to be the value of goods purchased by the company. So the gross profit is the revenue minus cost of sales, as we have already discussed. So here we can also find out the cost of sales, which is opening inventories plus purchases minus closing inventories, meaning how much you had in your inventory before all the production and the final things, and what you added to it, and then you subtract the closing inventory, like what was left. So whatever you use is the cost of sales. Let's say I had 80 potatoes and then I added 10 more, and by the end of the year I was left with 50. So what is my cost of sales? 40 potatoes. And now we have some figures from the book itself. It's like opening inventories at the start of the year were $500 and purchases during the year were $2,500. So total inventories available for sale were 3,000. So closing inventories at the end of the year was 750, which means you subtract 750 from 3,000, so you get 2,250. So the cost of sales is 2,250. And let's look at the profit or loss section. The profit from operations or operating profit, as we've already discussed before, is subtracting expenses such as overheads from gross profit. And we've already seen what overheads are, but you can read from here what overheads are, and you can find out a bit yourself. And then we have profit before tax, which we've already discussed, profit for the year. Moving forward, we have the appropriation account. This final section of the statement of profit or loss shows how the profit for the year is distributed between the owners in the form of dividends to the company shareholders and as retained earnings, and which is something we've already discussed in much greater detail, because you won't get this in the exam itself, but these are small little knowledge points you may use. All right. So then we have uses of statements of profit or loss. So how can you use these statements to your advantage? It can be used to measure and compare the performance of the business, as I've already discussed before. When you are a business owner, you will see how much you're achieving, right? So you'll be like, how much am I earning? How much am I losing? How much can I make more? So this is what you can use to gauge yourself. And then you can see what your budget was and how much the profit data actually reveals, like what you expected and what you actually got. And then other than that, if you go to get credit from the bank, your bank will look at all of your financial records and will be like, can you pay back your debt if we give you some? And if you give them a financial record, they'll be like, oh yes, I believe that you may be able to give back your debt. And then the most important part for investments this is this part, which we will discuss in greater detail in investment appraisal in the next chapter, which is prospective investors will use profit performance of the business as a guide to whether to buy shares in it or not. So if a company you're trying to buy shares in is not making a profit, you won't buy it. You won't buy the shares. If it's not giving enough dividends, you'll be like, I'm not earning anything if I buy shares here. So you won't buy it. Let's say if a company is making $1,000 in profit, that's a lot, right? If in a small company, right? Like a 10,000 or 100,000, but it only gives like 10,000 in dividends. You're like, if there's like 100 shareholders, I get nothing. So you won't invest in that, but you'll invest in a company that gives $10,000 of dividends, but only earns 20,000 because you're getting the same. You may even get more because there is less shareholders. So we'll look at the limitations in the next lecture. And for now, this is like the small introduction for statements of profit or loss, and we'll keep it till here. Thank you.